Hello. This is Helen Thomas from the CDFM study group. All right, so I just realized, thank you again for your comments and for letting me know that one of the last videos I just uploaded, the sound was not working on that video. So I owe you a repeat of that video, so I'm going to do that at this time. I'm going to go through the review of CDFM Module 3 for the whole entire competency 1, 2, 3, 4, and any other tidbits of information that I can share with you. So I'm going to go all over the place because on the exams, that's exactly how they're going to do it. They're not going to tell you if you're in competency 1, 2, 3, or 4, or fiscal law, or whatever the question is about. You're going to have to read the scenario, and based on the information given, they will ask you a series of questions. So you're going to have to know how to do some process of elimination to be able to get to the point where you can select the correct response. All right, so Module 3 reminds us in fiscal law that every appropriation has a specific purpose, time, and amount. So under the Anti-Deficiency Act, 31 U.S. Code, purpose is covered in 31 U.S. Code 1301. And what you want to make sure that you do as financial managers is whatever it is that you're trying, whatever the requirement is, you have to determine the appropriate appropriation funding to pay for that particular requirement. So let's see. So we said 31 U.S. Code 1301, time is covered under 1502. And when you look at the time in the fiscal law concept, you have to look at the bona fide needs rule. The basic rule says current appropriation, current requirements. So whatever it is you're trying to buy should be within that current year. However, you always have exceptions to the policy. And some of the exceptions could be the long lead time. What does that mean? It means that, let's say, something that you know you're going to require in November, but it takes the contractor 3 months to build that item, to prepare that item, to ship the item so that you can get it in November. You may have to spend current funds, cross over the fiscal year with those funds to be able to buy that item and get it by November. So long lead time can be an exception to the bona fide needs rule. Another exception to the bona fide needs rule is what? Stock level exception. If you also need a bunch of supplies early in October and you know you don't have a new fiscal year funding come October, you can't wait till October to say, oh, I need to restock my supplies. You may have to purchase, at least for October supplies, you may have to purchase that in September. Now, don't go overboard because sometimes people try to buy for the whole first quarter in September. That's not what I'm saying. I'm saying if you have a requirement in October, stock level exception, based on how long it takes for those stock items to come in, you may have to purchase the items in September for October. Exception to the bona fide needs rule, training. If you go to training and the training goes from September to October, training is what we called a non-severable service, meaning you have to complete the whole training to get the benefit of being certified in that particular topic. And so training, you can actually pay for the entire training session in one. Depending on your obligation rules, you can wait until the individual complete the training, then obligate the funds, or you can obligate with current funds the full amount for that training. Travel is a little different because if your travel crosses fiscal year, DTS probably will not allow you anyway. The defense travel system will not allow you to obligate the full amount with that one appropriation. But for training purposes, the training piece of it, you could pay the full amount because it's a non-severable. So since I'm going into non-severable, remember, services can be broken down into severable service versus non-severable service. You saw how I do that? That one topic led me to somewhere else that's not on the paper in front of me on my computer. So severable service is a service that if I end a service, I still would have received a benefit up to that point. And the most popular example that I give is a cleaning service. Every week you have a company comes in, they clean your offices for you, you receive the benefit. Now, let's say midway in the contract, due to government needs, I don't no longer need that cleaning service. I can end that contract with the proper documentation, working with the contracting office, of course, and I will still would have received a benefit. So that's the severable service. What you need to know for severable also is when do you obligate the funds? If you have a severable service 12 months or less, you obligate the full amount of the contract regardless if it crosses fiscal year. If you have a severable service and the contract says it's a 13-month, 14, 15-month, if it's a 13-month contract, you still can only obligate up to 12 months of current funds. So let's say the period of performance starts 1 September and I have a 13-month contract, I can obligate that 12 months with that 1 September fiscal year funding. And then for the additional month, I have to subject to availability of funds, or I have to use funding for the new fiscal year. If Congress has already appropriated the new fiscal year funding, I have to quote 12 months is current fiscal year funding, and for the new fiscal year, I have to quote funding from the new fiscal year. So it's not always subject to availability of funds because sometimes Congress does what it's supposed to do and they complete the review of the next fiscal year budget prior to October. Appropriations can be broken down into annual or yearly appropriation, multi-year appropriations, expense type. So those things you got to know. So the most popular appropriations we deal with is MILPERS and O&M are 1 year or annual appropriation, and they are expense type. It means they rotate quickly once a year, expense type. You have RDT&E are 2-year appropriations, procurement are 3-year appropriations, shipbuilding, conversion, Navy, that's building the Navy ship, takes a long time, it's a 5-year appropriation, and military construction is also a 5-year appropriation. That is important for you to know throughout this CDFM, because based on your knowledge of an appropriation, the current date, they can then ask you, when are these funds expired? When are these funds closed? When are they open? And what can you do with them? So let's say you have RDT&E funding. Let me get my pen here. You have RDT&E. There we go. I just gave you RDT&E funding. Today is 1 November 2022. When will these funds be closed? So the question being asked is closed. Well, you have to know RDT&E is a 2-year appropriation, so that's important. So the data that's given, you got to determine RDT&E is a 2-year appropriation. All right, they say today's date is 1 November 2022. Well, you have to ask yourself, what fiscal year am I in? I'm in fiscal year 23. So when are these RDT&E closed? So they're good for 2 years. So they're good for FY23 and FY24. They're expired for 5 years because every appropriation is expired for 5 years. So that's FY25, 26, 27, 28, 29. So 25 to 29. And that means FY30, these funds will be closed. That is probably the way you're going to see it if you see it again on an examination, because they're not going to ask you directly from what's in the book. Again, it's a certification, so think of it on that level. I'm not going to ask you exactly what's in the book. So for this example, these RDT&E funds from that I just received on 1 November 2022 will be closed fiscal year 30. Well, what can you do with funds when they're open? You can start new contracts, new obligations. Once those appropriations enter the expire state for that 5 year, the only thing you can do to those funding is make adjustments, those contracts. You cannot start any new contract with an expired fund. So that contract would have had to have already been in place when it was open. Now it's expired. That 5 year period, you make upward and downward adjustments. Then what happens once the funds enter the closed state? Well, the funds are then removed from your accountability and they are sent back to the Treasury and placed in the miscellaneous receipts account in the Treasury. But what if you get an invoice when those funds are closed? You don't automatically just tell it, oh, well, you waited, 5, 6 years, you could have gotten your money. Those funds are closed, so I don't have nothing for you. No, you have a 1% rule where you can take 1% of current appropriation, the same type that you would have used back then, and pay that vendor. Or if you do not have the funding, then you have to direct that contractor either to DFAS or to your hire. You have to try to get the funding. If you've exhausted all measures to get that funding on that closed account to cover that particular invoice, then you have to refer them to DFAS to request their funding. So let's switch on talking about termination of contracts. I have a contract in place, and in most contracts, actually in all the government contracts, there's typically a clause that says, if the government no longer needs your service, we have the right to cancel this contract. It's not in there for contractors to do that. So if a contractor is not performing to the standards of the contract, then you can terminate them. Of course, you got to work with the contracting office to make sure things are done legally. So if you are selected as a contracting officer representative, a COR, it is essential for you to actually check and double check the work of that contractor before you sign off on that. I think it's a DD-250 saying that, yep, job is complete, pay them. Because as you are signing that document to accept the work, the government is obligated to pay that contractor for the work, even though someone else may come back and say, oh, that's not good. They didn't do it right. You accepted the work. So in that contractor's eyes, they must be paid. And so at some point, if you go to the contracting officer and they terminate the contract, we still have to pay that contractor for works that we accepted, and then try to get another contractor to complete the job. So you can terminate for convenience of the government or contractor default. Now, let's say you still have a requirement to complete. You can take the remaining fundings and you may have to request additional funding to complete the work, especially if that new contractor has to undo everything the other one did. But as long as the scope of work remains the same, you don't change anything, no great ideas after the fact, then the contractor can just try to put out a bid to get another contractor to complete the work. Once you start going outside the scope of what the original contract was approved for, then you have to go through that whole approval process again. Now, we talked about appropriations earlier. Remember that there's also no year appropriations, or the X funds. They show as X is the code in the appropriation line. No year funds, the most popular one in the Department of Defense is the Defense Working Capital Funds. I'll go over that quickly. Think of your commissaries on your installations, your bases. Commissary takes their funds, and it sounds the same way like how the civilian side work, but there's one major difference between the government doing it and the commercial side doing it. So the commissary takes the money that they have. When they first set up, Congress gave them some appropriated funds to get started. They take the funds, they buy the items, they put them on the shelf, and based on what it costs them to ship the items, get the items, put them on the shelf, pay the workers, they charge specific prices on those items based on that. To put it on the shelf, the customer comes in and the customer buys and pays for the items, and then that money revolves. Revolving fund is a no-year appropriation. However, there are still rules that they have to abide by. They don't have to go back to Congress anymore every year. So a working capital fund, the goal of the working capital fund and what makes it different from the civilian side is it has to break even. So break even means once at the end of the year, when they look at their books and they look at their trends for the last 3 years, if it shows that they've earned a profit year 1, year 2, year 3, that means year 4, they have to lower their prices. So I think it's either year 4 or year 5, they have to lower their prices, because unlike the civilian side, that their goal is to earn a profit, on the government side, their goal is to break even. So if you notice when you go to the commissary from 1 year to the next, sometimes the prices are like way up here. And then another year you go back, you see like the prices are way down here, because the goal is to break even. Now, no-year appropriations, those organizations can be closed. There are 2 ways in which a no-year appropriation or working capital fund can be closed. One, if the agency head, which the Department of Defense or the president says, we no longer need that service, we no longer need commissaries, then you can close a working capital fund. The other thing is if they have no disbursement, they have not been doing any business for the past 2 years, that is another signal, close that no-year appropriation. So make sure you know those 2 ways to close a working capital fund or a no-year appropriation. So now we move on to amount. Purpose, 31 U.S. Code 1301, time 1502, amount is covered on the Anti-Deficiency Act, 31 U.S. Code 1341, 1342, and 1517. Whenever you have a list, you need to know the difference. All right, so let's see. 1341 talks about we cannot spend in advance or in excess of the appropriation received. So who receives appropriation? OMB receives appropriation. So that tells me OMB can violate 1341. 1342 deals with voluntary services. 31 U.S. Code 1342 means we cannot, for the general, we cannot accept voluntary services. Of course, there are always exceptions, but for the most part, if a position is a paid position, what am I talking about? Let's say you have a GS-12 position, there's nobody in that position at the time, and your boss's wife or your wife is a financial manager, just happen not to be working, they don't really want to apply to the job, but they want to keep their skills up, so they say, hey, I can come in and volunteer, and I can help you do your job until you hire someone. If that position is a paid position and you do not have the right to lower that position to a $0, you cannot accept voluntary service. The exception comes in if it's a position that you have the ability to lower the payment or the salary to 0. And the only thing I can think of is the family readiness groups. Like in the past, those individuals were not paid way back when. Let me not date myself. But in the last few 10 years or so, they have FRD positions that are paid. Now, if you read through the bylaws and so forth, and that commander has the ability to lower back that position to zero, and that FRD person just wants to volunteer, you can do that. If you have the candy stripers, Red Cross folks that are statutory, that have the statutory authority to accept volunteers, then you can accept volunteers. So bottom line, you have to have the authority stated somewhere in some law, some policy, that you can accept voluntary services. Then you have the third one, is 31 U.S. Code 1517, Chapter 15, Section 17, talks about you cannot violate, you cannot spend in excess or before you receive your apportionment. So I'm focusing on those words because you got to remember the funding flow. Funding flow says that Congress appropriates the funds, OMB apportions funds, DOD issues allotments. Then everybody that falls under Department of Defense, Department of State, don't forget all the other departments, but this is a DOD exam, so I'm focused on DOD. DOD issues allotment, we commit the funds, administrative reservation of funds, obligate legal reservation of funds, we legally bind the government to make a payment, and outlay. Outlay is the same thing as disbursement, but in most cases in the exam, you're going to hear the formal term outlay. That's when the Treasury releases the funds to pay that bill. That is an outlay. And so 1341, 1342, 1517 all goes with the amount of fiscal law, purpose, time, and amount. So let's say someone violates the Anti-Deficiency Act. So within 10 days, you got to notify your hire. And if it's found after you do 14 weeks and you do the preliminary review, and it's found later on that you truly violated the ADA, there are several penalties. You have administrative penalties and criminal penalties. Administrative is simply retraining. They may move you to a different job, just administrative things. Or criminal penalties. You may have to pay $5,000 fine or 2 years imprisonment or both. So 5,000, 2 years, or both. So we talked about voluntary services, comprehensive service ed, example, candy stripers, museum workers are also volunteers. Two things happen when Congress appropriates the funds. So let me walk through that piece of it. What are the two things? The first thing that happened is the first legal step. Legal because under Article 1, Section 9, Clause 7 of the Constitution, it says no money can be drawn out the Treasury unless you have an appropriation law in place. That's my interpretation of it in my words, but that's what it means. I can't take any money out the Treasury unless we have an approved appropriation law. So two things that happen once Congress appropriates the fund is the Treasury issues Treasury warrant, which is a notice that says, now we have the appropriation law, so it's legal, it's tied to that law, and your account's been set up so you can start charging against your account for the new fiscal year. The second thing that happens is OMB begins the apportionment process. But how does it really go? OMB doesn't automatically send the agencies their apportionment. No. Once Congress appropriates, the agencies must complete an SF-132 apportionment document requesting their funding. Mother, may I have my funding? Dad, can I have my funding? So the SF-132 must be submitted within 10 days of Congress appropriating the funds, and then OMB has 30 days to issue the apportionment. So you got to know the difference between all these A words: allotment, apportionment, appropriation. Then DOD issues allotment. So everybody that falls under Department of Defense receives an allotment. All right, so I'm just kind of looking through my notes. All right, so what happens if we don't have an appropriation law by 1 October of that new fiscal year? Either we have a continuing resolution or the government will shut down. Because again, goes back to Article 1, Section 9, the money cannot come out the Treasury for that fiscal year unless you have an appropriation law in place. All right, so let's say continuing resolution, temporary appropriation, stopgap. It's a Band-Aid to hold us over so the government doesn't shut down. We can still operate, but we are restricted to the rate of operation from the previous year. So if at the last year, at this point of the year, you've spent $2 million, you have to keep all your expenses up to this point, $2 million or less, until Congress appropriates the fund. However, let's say the Department of Defense has executed up till December, and then Congress comes back and lowers the actual budget or appropriation, then has the Department of Defense violated the Anti-Deficiency Act for amount? No, because whatever the rule is at that time, as long as we are adhering to those rules under the continuing resolution, then it doesn't matter what Congress appropriated later on. We cannot violate the appropriation if we are operating under the rules that they set for the continuing resolution. All right, so we talked about accountable individual versus a certifying officer. So your accountable individuals can be your leaders, your military or civilian, who are designated as accountable individuals. Certifying officers, dispersing officers, these are the people who have that final say in pushing the funds out. And when we mention fiduciary responsibility versus pecuniary responsibility, a fiduciary certifier is certifying that you're using the right fund. F, fiduciary fund, F. Pecuniary responsibility or certifiers, think about pecuniary, that sounds like a bad word. That means if you make a mistake and it shows that due to your action, you contributed to people being paid the wrong amount, then you can be held liable to pay back the money. So your dispersing officers, individuals who have, anybody who's certified that the final payment, that cash goes out, that check needs to be paid, and didn't verify the documents properly, didn't make sure it was the right dollar amount based on the supporting documents, you can have pecuniary liability. So make sure you know what an appropriation, apportionment, allotments, budget authority. That means every funding that we spend of government money or the taxpayers' dollars, we have to have the budget authority to do so. I think they mentioned 6 types of budget authority. So what are the 6 types of budget authority? If you got a list, if I'm writing a test, I'm going to say which one is not a budget authority, a form of budget authority. Then you got to fit it in. Let me see if I can remember. A, B, C, L, M, O. Appropriation, contract authority, monetary offsets, loan and loan receipt. M, let me see, hold on. A, B, C. C is contract. All right, see, that's why I have to do it with stay in sequence. Appropriation, and it's not in front of me. AB, what's the B? Budget authority, so that's, oh yeah, I gotta come back to that one. Hold up, let me see. Put myself on the spot. Control find, so I'm checking my notes here. See, that's why I say repetition, because it's so easy to forget. Let's see, budget. So appropriation, budget authority, contract, monetary, loans and loans receipts, and contract. Yeah, I got to come back with that one. Excuse me. The goal is before I finish this, is it'll come back to me. All right, let's see. Certifying civilian pay. How many pay periods in a civilian work year? You have 26 pay period within that 52 weeks. How many for the Family Friendly Leave Act? How many hours of sick leave does an individual receive? Even if they're not sick, they get 106 hours of sick leave. How long do you keep employee pay records? 56 years. All right, so let's see. TDY, we talked about the 1610 is a document used for temporary travel. So with the with the finance piece, you got to know the like some of these document numbers. Let's see, the 1351-2, that's your travel voucher number, because we do it electronically now in the Defense Travel System, DTS. So a lot of times people don't remember the numbers. So make sure you loan. The 1610 is the authorization, and the 1351-2 is your travel voucher. All right, who pays for the permanent duty travel if an individual is traveling from CONUS to CONUS? That's within the continental United States. The gaining unit pays if it's between CONUS and CONUS. If it's from overseas to CONUS, the losing unit pays. If it's from CONUS to overseas, the gaining unit pays. So it kind of says that anytime OCONUS is involved, it's the overseas unit that's paying. OCONUS to CONUS, the losing pays. CONUS to OCONUS, the gaining. That's the same thing as saying as the overseas organization pays for anything, anybody going anything overseas, coming or going. Payments to vendors, your payment packet. Yeah, I've been under the weather, so excuse my coughing. Prompt Payment Act, in most instances, you have to pay your invoices within 30 days of receiving the items, or once you get that invoice, the date of receipt. And so if in the contract it says, for example, 2/10 net 30, what that means is the contractor is saying you could take a 2% discount if you pay the bill within 10 days, or you pay the full amount in 30 days. So with the prompt payment, you got to make sure that you also review reconstructing the payment due date. Collections, if you have to pay, because remember the functions of finance. Entitlement, if you're entitled, I'm going to pay you. And then I'm going to collect if you owe. Collections, which is what we're talking about now. And we look at the flow of funds. So receipts, if you collect funds, you collect it on a DD form 1131 cash collection voucher. DD 1131 cash collection voucher. If you say the number and the words together, whenever you see it again, it'll be easier to recall. What happens to the funds if, let's say, a soldier loses a gear, soldier, airman, all of that? If someone loses a military gear and they have to pay it back, where does that funding go? Once the soldier pays for the item on a DD 1131 cash collection voucher, gets taken out of their check, they pay for it, that accountability is removed from that organization for that item, but then who gets the money? Well, the money does not come back to that organization. The money goes and deposited into that miscellaneous receipts account in the Treasury. Dispersing officer cannot be out of balance. What is considered a major loss of funds? So a major loss of fund is anything that's more than $750. If you're a dispersing officer, dispersing agent, and you lose over $750, that is the threshold, then you have a major loss of funds. If it's under $750, then it is a minor loss. Delivery of check, a check is considered undeliverable if they continue to try to send a check out within a 60-day period and it cannot reach its return from sender because they can't find that individual, that is an undeliverable check. An undeliverable check must be reported in an SF 1098 to credit the amount back. So remember, when they send a check out, it's like reducing their accountability. But that check was not delivered, so once it comes back, they have to fill out an SF 1098 to put it back in accountability. Spoiled checks. What do we mean by spoiled checks? A spoiled check is, for example, you receive a check from the IRS and you spill coffee on it. You can't take it to the bank. Most places are not going to take it if you're missing pieces on it. They can't read it. So that is considered a spoiled check. You have to send it back to whoever sent it to you to request issue of a new check. Excuse me. Be familiar with things like the 1990 Chief Financial Officers Act that required each agency to have auditable financial statements. That's the reason for Army why we have GFIN came about, because we didn't have an auditable system. 1990 Chief Financial Officers Act. In the 1921 Budget and Accounting Act, that one's also important because it established the GAO, Government Accountability Office. It established the Office of Management and Budget, and it also required the president to submit the budget to Congress no later than the first Monday in February. What does GAO stand for? GAO is the Government Accountability Office. The GAO, which is headed by a Comptroller General, is an independent auditing organization that works directly for Congress. Congress says do's and don'ts for these appropriations. They don't have time to check to make sure we're doing it. So here comes the GAO. So the GAO audits the executive budget, the executive branch, to make sure that we are following the guidelines established in fiscal law, established by Congress, established by the Constitution, whatever law was in place. That's the function of the GAO. So on the 1921 Budget and Accounting Act, the GAO came on board. The OMB, Office of Management and Budget, also came on board in the 1921 Budget and Accounting Act. OMB is the budget or chief financial officer for the executive branch, for the president. So OMB that apportions those funds, they were established in 1921. Budget and Accounting Act. And the president must submit the budget, federal budget, that comprehensive budget, national budget, PresBud. These are all different names that can be used for the same thing. So how that works is the president gets the budget, OMB sends it up to the Congressional Budget Office, and then the Congressional Budget Office does its thing. So I might as well, let me see, head off in that direction. All right, so once the president submits the budget to Congress, then Congress goes through 3 phases: the budget resolution process, authorization process, and then the appropriation process. There's a different House and a different Senate responsible for each one of those phases. So the budget resolution process, the House and Senate Budget Committee, what they're doing is determining what guidelines they're going to use, they're going to establish as they look at what the president submitted for the budget. They want to look at the CBO's, Congressional Budget Office, will provide the data, the accounting data. What is the deficit? What did we approve last year? What's the expenditures for this year? All the numbers are provided. Then the House Budget Committee and the Senate Budget Committee look over those numbers, look at the PresBud, and they determine what guidelines they're going to establish. Then you have the authorization process. The House Armed Services Committee and the Senate Armed Services Committee will then go through the process individually. So the House goes through it on their floor. The Senate will go through it on their floor. They come together in a conference committee of the third chamber to determine what discrepancies they have, because only one document can be published. So they have to resolve their differences in a conference committee. Once they resolve the differences, both the House and the Senate go back to their floor, and then they update their information. Then one document is enrolled and sent to the president for the president to sign as the final budget or appropriation. Let's see what else we have. Accounting standards, you have the Financial Accounting Standards Board that established the generally accepted accounting standards. Government Accounting Standards Board issues the GAAP, which is that generally accepted accounting principles, is issued by the FASAB, Federal Accounting Standards Board. I know these acronyms. That's why I have to say it out, not just the acronym, because it can get confusing. Who is the principal advisor to the Secretary of Defense on budgetary matters? Who is the principal financial advisor to the Secretary of Defense on all budgetary matters? That is the Undersecretary of Defense Comptroller, USD Comptroller. The USD Comptroller is in charge of the budgeting and execution phase of PPBE, Plan Program Budget Execution. The USD Comptroller is the Chief Financial Officer, and he or she also directs DFAS, Finance and Accounting. We went through that. We went through the floor funds. Obligating documents. Every obligations, we have to have supporting documents. So what are some of the types of supporting documents? You have contracts, which is straightforward. And you also have military interdepartmental documents, which is the MIPRs, project orders versus a Economy Act order. And here comes the term severable and non-severable again. The Economy Act MIPR, if it says it on the MIPR, got about 10 more minutes of this voice. The Economy Act says it's a severable service. That means I can end it. Because the Economy Act order, once you the fiscal year completes, then you deobligate those funds. Project, which sounds like a project, something huge, project order is a non-severable. So that means you, even if it crosses the fiscal year, you do not deobligate the fund. So you got to know the difference between a project order and Economy Act order. The MIPR 448 is the funding document, and the 448-2 is the MIPR acceptance. That's the other agency accepting the job for that money. What are the different types of accounting? You have budgetary, financial or proprietary, and managerial cost accounting. So I'm kind of jumping around. So budgetary, you got to know the formula, resources equals status of resources. The key to the accounting section on the CDFM is the general ledger, making sure that you know the 1,000, anything starts with a 1 is an asset, 2, liability, net position is 3, 4 is budgetary, 5 is revenue, 6 is expenses, I was doing good, and then 8 is miscellaneous. I don't remember what 7 is offhand, but you get the gist, because you may be given series of numbers starting with 1 through 8, and they say calculate the balance sheet. Well, the formula for the balance sheet is assets equal liability plus net position. So anything that starts with a 1 equals all that starts with a 2 plus all that starts with a 3. So review the chart of accounts. Legal, went through that already. The CFO Act. Threats to auditor independence. So in auditing, that's an external organization coming through looking at your processes. There are actually 4 phases of an audit. In the book, if you look at the study guide, it kind of can be confusing because it says plan, review, report. Yeah, report. But you plan for an audit, you are typically notified of an audit. Most people, once you're notified of an audit, you're not just going to sit there and wait for them to come in and review. What do you do once you've been notified that the plan is in place for an audit? You typically do your own internal control. So plan, internal control, then they come to do the review, then they report. Auditor recommendation can be considered the 5th phase, where they give their recommendation for what they found and what they recommend for you to fix it. So an auditor should be someone that's independent to your organization, but you do have some threats to auditor independence. Self-interest, self-review, bias threat, familiarity. So you don't want nobody familiar already to your operation. You want somebody who is external, don't know what's going on in your business. They know about financial management, but not your particular organization. Management participation. Management is being involved in the process, so it can kind of make you threaten the auditor's ability to effectively conduct their audit. Structural threats. Auditor professional judgment, that's a judgmental sample, can only be used to describe and conclude about the evaluation. You want them to use their professional opinion based on what they found. Auditor competence, people that are coming into audit, they must have training. They must be competent in that they must complete 80 hours of continuing proficiency education or professional education every 2 years. They must complete 80 hours and at least 24 hours must be done in a year. So they can't just not do nothing for 1 year and then take all 80 hours in another year. Each year they have to do at least 24, and in the end of the second year, they have to have done 80 hours. That is the same requirements once you earn your CDFM or your certification, you also have to maintain that 80 CPs every 2 years. The auditor organization must also themselves be audited every, I think is it 3 years? Let me see what it said. I want to make sure I give you the right audit organization or something showing their staff collectively have the necessary knowledge, must maintain their competence for continuing education. Yeah, 3 years. We went through the phases. Okay. All right, let me switch gears. See what else I have here on module 3. So we went through that basic idea. All right. So in module 1, you kind of went over the 3 branches of government: legislative or Congress, executive or president, judicial or courts. Legislative makes the laws, executive executes the laws, judicial interprets the laws. So if you see anything and it says Article 1, Article 2, or Article 3, they directly relate from the Constitution, they directly relate to Article 1, legislative branch, Article 2, executive branch, Article 3, the judicial branch. The GAO publishes 3 books that we talk about in the study guide. And think of it as a stoplight: the GAO Red Book, GAO Yellow Book, and the GAO Green Book. The GAO Red Book deals with appropriation. The most authoritative source that you can find in appropriations is found in the GAO Red Book. The GAO Yellow Book deals with auditing. And the GAO Green Book deals with internal control. All right, so we went through that. All right, once the president receives a general proposal for a law, he has several choices: approval and sign, veto, does not sign but allows it to become law, a pocket veto. Approval and sign is simply what it says. The president receives the bill, which is that general proposal. He agrees with everything in it. He approves it and signs it. Or he can veto. Veto means if he disagrees with any portion of that bill, he returns it to the originator, and that becomes null and void. Be familiar with the 1996 line item veto. And the reason I'm going over even though this is listed in module 1, again, all this information, because it's fiscal law, it overlaps. So you have to go over, and I have a video out there called Fiscal Law 101, where I incorporate all 3 modules and the fiscal law from all 3. So the 1996 line item veto, what that means is in 1996 timeframe, President Clinton was allowed to veto portions of the bill. Line item veto, he was allowed to look at the bill, and if he disagrees with a portion of it, he could line through it and then sign the bill into law with that piece marked out of it. The courts in the 1996 line item veto deemed that it was unconstitutional to do so. So it's when he vetoes, you got to veto the entire bill if he disagrees with any portion of it. So what is the difference between does not sign but allows the bill to become law and now another pocket veto? The pocket veto says that Congress is adjourned. The president receives the bill, does not return it within 10 days. So if Congress is not in session and the president receives a bill and doesn't sign it, then it does not automatically become law. It's a pocket veto. However, does not sign the bill, but the bill still magically becomes law happens. The condition is Congress is in session, the president receives the bill and does not sign it within 10 days. If he does not sign it within 10 days and Congress is in session, then that bill would automatically become law. So I wanted to point that out. Let's see, talk about apportionment, budget authority. Let's see, I'm going to stumble on my words in a minute. Let me see, 31 U.S. Code, we talk about severable, non-severable. Most of these we discussed already. Gifts, appropriation. Here we go. Control, okay. The auditing standards, control environment, risk assessment, information and communication, monitoring, and existing control activities. Right, so I wanted that. Physical loss. Make sure you also know if I say how much is the unapportioned amount, appropriation. If you know the floor fund is appropriation, apportionment, allotment, commit, obligate, outlay, if they give you a dollar amount for each one of those and they say which is the unallotted amount, then you know you have to minus what's been allotted, minus what has not been allotted, minus what was apportioned, what was allotted, and then it'll tell you what was not yet allotted, unallotted amount, and so forth. So don't let those terms lose you. Whew, I think my throat is about gone. Okay, we went through all of that. All right, so let me look through some of my other notes here, see what else we have. CDFM module 3. So. If a reserve soldier, a reserve individual is ordered to active duty, are they entitled to any benefits? Yes, when it comes to benefits for housing, yes, they are entitled to get partial BAH. What is a premium pay? We say on a civilian has premium pay, that's like your overtime. That's an example. So on TDY is not considered a premium pay. All right, so I think, let me see, obsolete, travel. Okay, so we looked at that one already. Let me look through and see if I got anything else for you. All right, nothing on that one. So the key with the at this point when you're doing the review is to review all the material, mix it all up. And let me go back through module 3 notes. Going down my notes again. Is to make sure that no matter what type, the way that the question is being asked, so I have that one already, that you are familiar with the response. I have different types of questions asked in different ways, so I'm just going through again to make sure. So let's see. All right, so, and as I promised, I just remembered, yes, ABCLMO, the different types of budget authority. All right, so A is appropriation, B is borrowing. I have to have the authority to borrow, like I couldn't remember that B for nothing. Appropriation, borrowing authority, contract authority, ABCL, loan and loan guarantee, monetary credits, offsetting receipt. Appropriations, budgetary. All right, yeah, I got it. 6 of them. appropriation, borrowing authority, contract, loan and loan guarantee, monetary credits, and offsetting receipts. Let me see if I can find it on here. Purpose, time, amount, Secretary of Defense delegated to DFAS. The basic idea in fiscal law is it must be in writing to say what you can do with those appropriations. So it's not if it's, well, it's not listed there, so that means I can do it. Constitutional authority, fiduciary, pecuniary, annual appropriation, ADA. Okay, I think that's it. So I'm gonna wrap up the review of CDFM Module 3 at this point, because I've kind of covered everything several times, 7 different directions. So we will take a pause with the live session to allow you the ability now to prepare yourself, focus, to go and actually take the Module 3 exam. Do not wait for a long time because the information is easily forgotten if it's not something you deal with on a regular basis. Feel free to reach out to me, leave a note on the video, a comment. If there's something you need me to clarify, I can send you a personal email to explain it. Whatever it is, I'm here. Even though you're watching this video later on, I'm still available to you. I will respond to your comments as soon as I get to it, as quickly as possible. All right, this is Helen Thomas on the CDFM study group. Please be sure to subscribe to our YouTube page if you haven't done so. It doesn't cost you anything. The only thing it does for our YouTube page is the more people that click subscribe and comment, leave comments, click like or so forth, it shows a lot of activity on that page. So then the YouTube folks will start advertising the channel more to individuals. So this is Helen Thomas from the CDFM study group. I'll see you guys again next time.